I mean, there's some pretty big problems to solve. As it struck me last September, you're kind of frantic, very excitable retail audience, and quite a lot of them, right? In terms of the balance between institutional and retail was, extreme, to put it mildly, and I think it perhaps was causing some issues. And the other thing was people didn't really know what you were. Is it
exactly
nickel
right.
company? The Royal Nickel Company. And you also did gold. So those were two kind of big things which struck me at the time. And you did lay out a plan for you knew what you needed to do, and as a case of just being able to deliver it, you just needed some time to deliver it. So, do you think you've managed to do that?
Yeah, I think we've executed very well on the plan that we laid out to the market a year ago. You're right. If you fast forward back towards just prior to the Higginsville transaction, this was a company that had a very exciting asset in Beta Hunt that had produced obviously some high grade coarse gold nuggets, but had no real stable mine plan, and also had the second largest undeveloped nickel deposit in the world in Dumont that had been sitting there for quite a while. So when Paul came in, and of course our operator and Graeme Sloan, and then myself, we had to focus this company on what we wanted to be. And ahead of a strong gold cycle, we knew we wanted to be 100% focused on gold. So we've executed that corporate strategy with the divestment of Dumont, which we announced earlier this year. Obviously, we retain upside for our nickel investors in the fact that we can get up to $48 million on that sale, got $11 million into the bank right up front. So that was very, very important. We needed to provide a stable operating base. So the acquisition of the Higginsville mine and mill was absolutely critical for providing a stable operating base and allowing us to consistently deliver production every single quarter while improving margins and provide that reliable resource base and delivery of production that has allowed for the next tier or quality of institutional investors to enter this story. So if we had this conversation a year ago on camera, I would have told you we are around 8 or 9% institutionally owned at that period of time. Today, we're well over 55% institutionally owned, and we have some of the best mining investors in the business owning our stock, guys who got in early to very successful stories previously. On top of that, we also have significant investment by US and UK generalists, which are now coming into the sector and seeing Karora Resources with what we've done over the last year in providing that stable base of operations, a cleaned up capital structure, and a top tier board and management team. We provide them a very, very compelling investment thesis, which they're obviously enjoying the success of right now. So I think we've executed on that strategy very well. And the last bit I'll touch on, which we did lay out to the market, of course, was that focus on costs. We had 4 main areas we wanted to focus on: royalties, which we've obviously been very successful with and has transformed the future of this company, G&A, top 20 vendors, and then, of course, personnel. So as you've seen, our best report card, of course, is our quarterly performance and quarterly reports. Our all-in sustaining costs are continuing to decline. We continue to target that $1,000 US per ounce mark. We're very confident we will get there. But that's taken a lot of discipline and a complete overhaul of the prior business in order to arrive at where we are today.